Okay, if you've been watching my videos lately, you know that I talk about setup plus trigger equals trade entry, and then you manage it. And that's basically how you make money with this work. So it's time to show you another example, and this is one that's in process at this point. So the setup was the Fibonacci price cluster zone. This is a daily chart of the TLT, and this is where we found a confluence of a 618 retracement of this swing, a 1272 extension of this swing, and that also just happened to overlap a 100% projection of a prior rally swing. So bottom line, we had 126.84 to 127.28 as possible resistance and an area to look for a sell entry. So let's take a look at what I would use as an aggressive swing trade trigger. An aggressive swing trade trigger would be a 15-minute chart. 30-minute would be the regular one, okay? And this is where I want you to see or look for a moving average crossover. So for a short, we're going to look for a crossover to the downside. On the lower time frame charts, I use 834 EMA combo. So when you see this crossover, that's the first part of the trigger. Okay, so once it crossed over, that was part of it. And then you want to look to the left and see if in the process you also took out a prior swing low, which actually you did take out this prior swing low a little bit after that, but you already had taken out this prior swing low. And that's enough to provide a trigger, okay? So when both of those things occur, you basically see the pattern shift from, you know, higher highs and higher lows to potentially lower lows and lower highs by taking out a prior swing low. And you also see the moving average crossover. You can short, and then your definition of risk is either going to be above the high that was made prior to the sell trigger, so either above here or above the top end of that zone that I gave you, depending on how much room you want to give it, which would be above 127.28. So it set up, it triggered an entry, and then you manage it. And managing it means you just have to have an initial stop in place, you know, where you know that you're wrong the setup. And then managing it would be using a trailing stop, or at least getting to a break-even stop as long as the trade starts to move in your favor. So we're going to watch the support decisions on the way down. If we just continue to blow through them, your potential downside target's going to be this 120-123. But again, don't make any assumptions that it will definitely get there. Just trail your stops down as you go and just see how much the market gives you.